I'm Kolana.
I'm Moya. We are 2/3 of Build a Sister Up.
And we have our other member, well 2/4, half, 3/4.
Yeah.
Build a Sister Up, our Wanda right there, our mother.
And today we are going to be talking about our finances, which is very important.
Yes, investing, trading, and options. We're going to have guest speaker Mike the Priest on in just a minute. He's going to be telling us all about trading and options. If you're just wondering if you should ever break into that field and just, get your feet wet, this is for you. If you don't know what to do, if you have like Robinhood or what's the other one called? ATD Trader or whatever those are.
So many Acorn.
Acorn. Some of those. If you have it and you haven't done anything with it, or you just bought some stock and you don't know what to do with it, this is for you. It's an intro course to trading and options. And Mike the Priest will be on in just a second just to tell us about all of that. But I guess we'll just start out by saying thank you all for coming with us along this ride, this journey. This is a blessing to see another day. We'll start off with a nice little thank you to Jesus for all he has done to us and for us, and will continue to do for us, and expand our horizons in a different way, building wealth and success in different endeavors. And that's what we're hoping to get into and learn all about today. So you all want to say anything?
Yes, we are thankful to see another year, 2021. Everything that we have overcome from 2020 and every past year. And we just hope that we are able to be fruitful and blessed this 2021, be a blessing for many generations to come.
Yes, of course, of course. And what are you hoping to get from out of this intro session?
I'm just trying to learn about my finances, what I can do.
Okay, yeah, me too. Because we do have in Build Us Up and Build a Brother Up, we currently have our Business Spotlight of the Week going. This is the crowdfunding program where we are asking our members to donate to the Business of the Week. And we do know that the donations are down. These donations go straight to the businesses, but people just aren't donating. But we're asking people to just continue to donate. And one way to do that is to get the finances up. We can lean on each other to grow our businesses, and we can also lean on outside sources. And we do that by learning outside sources. So that's what we're going to do today. We're going to learn something else, like a third leg to lean on, maybe some trading. And I think it's going to be fun. We're going to have all kinds of fun. I can't wait to see what's in store. I have my pen and my paper ready. I am an academic scholar. I love just learning new things. And of course, I love learning how to put more money in my pockets. That's number one.
Who wouldn't want more money in their pocket?
Okay. So I'm excited. You all saw us on Tuesday, was it? I believe so. And we had Dominique Durant come on and say why, or what she's doing and why she was our Business of the Week and how we can help her through crowdfunding. And she just gave us so much encouragement to keep doing this. So thank you, Dominique, for that. Our Business of the Week this week is Tahitian Treat Boutique. So go onto her page and like her page. That's I think Tahisha Reed King. I think that's right.
Yeah, we Dominique Durant, she was just a beautiful person on the inside and out.
Yeah.
That she's able to be fruitful in her business.
I just wanted to add before we get started too, it is God that gives man strength to create wealth. And we want to create generational wealth for our families and for ourselves. And so this is an opportunity for us to learn, to begin to just create what we know that is ours, because God has given that to us and we want to use that wisely.
Yes, of course. And we are just excited to have such a wonderful teacher on. And remember, this is just a disclaimer. Mike the Priest is not a financial advisor. He's not a tax advisor. Trade at your own risk. Remember, if you are seeking other information, just look to outside sources like financial advisors and tax advisors, people like that. Any questions you have, we'll have the last 15 minutes to answer those questions. But remember, Mike the Priest is not a financial advisor. He is not a tax advisor and any other professional person in that type of capacity. If you are seeking professional services, do seek the counsel of a financial advisor or professor or someone in that nature. And welcome, Mike. Hi.
Hey, how you doing?
Good.
Welcome,
How are you?
guys. How are you all?
We are on. We're going to turn our volume up.
See if I can share my screen here.
Okay. So yes, we were just telling everyone how excited we are. We have our pen and paper ready. We're going to learn some awesome things. Remember to see our disclaimer once again. Mike the Priest, he is providing this information for us, and we're providing it to you for free. So don't rely on us for the accuracy. Trade at your own risk, and keep your pen and paper handy for any questions you do have. And we're going to just have fun with this. This is going to be awesome, 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 awesome. So
also, I will be sending out a transcript.
Oh, okay.
That would make it so much easier if you don't have a pen and paper. You can, I know you want to probably take notes, but I will have a transcript.
Oh, thank you, Mike.
A couple of, so, how do I join this thing? I'm not.
You're all in
now.
Yep, you're on.
I'm talking about screen sharing.
He wants to. Oh, okay. Let's see. Do you see share screen on your Zoom at all? Yeah, you just hit share screen and then
hit the application that you want to share.
Yeah, you have, after you hit it, you should be able to just go to the application you want
to share. I want to share this one right here.
So you move that one over.
I want to share this one.
Yeah.
So, but I don't see it highlighted because it should highlight in the center. Hang on, give me 1 second.
Okay. So yes, we are just excited to do this, and Mike is going to be so kind to share his transcripts with us.
That makes things a lot easier.
I know, right? He's a teacher, so we are hearing great things about him. His lovely wife has told us all about him, and we said yes, we would like to learn from him. So this is going to be great. This is going to be on Facebook in our Build a Sister Up, Build a Brother Up, and Virtual Black Business and Expo groups. And it's also going to be recorded so it can go on to our YouTube page. So you can like our YouTube page, subscribe to our YouTube page. It's called Go Bass Up, like it, love it, share it, tell other people about it. Bass Up TV. Tell other people about it, and let's just have fun with this. Let's just have fun.
Yes, his wife is in our group, our Facebook group, and she always gives great commentary inside of the group. So we definitely trusted her advice and her husband to be able to come into our group and to give us knowledge and gems. So we are ready and we are excited for them to drop some gems for this financial teaching that we have today.
So the first hour will be about trading, all about trading. And of course, Mike is going to tell you more about that. And then the second hour is going to be about options. I don't know anything about options. I know just basically nothing about trading either. That's why I actually wanted to do this. So first hour trading, second hour options. And this is going to be fun. Are you able to share?
Yes.
Okay, great.
Can you see it?
Not yet, no.
It says number 1. Oh, there it is. I got it. Press.
Okay. There you
that
go.
Might help.
All right. Okay. So whenever you're ready, you can go get started. This is the wonderful Mike the Priest. He is so kind to just offer us some free informational sessions. Well, 1 hour of trading, for second hour of options about all of this. This is good stuff if you are interested in investing in this way. So Mike, whenever you're ready.
Do you see my screen?
Yes.
Yes.
Okay. Basic stock and options 101. A little bit about myself. I'm going to give an agenda today, basically going over myself, definition of stock and options, trading types, what IPOs are, what the markets are, exchanges and indices, bulls and bears, charts and indicators. I am going to even give trade ideas, so that might help. And then we're going to go into options, and then we'll have a questions and answer session.
Okay.
All right. A little bit about myself. I'm a seasoned options trader, stock and options trader. This is one of my trades that I took back in October. It was pretty much a day trade, if you can look at it. I started at 7 o'clock in the morning with $9,000. And it took me 1 hour to take this Carvana trade, okay? And I sold at the end of the day for about maybe $9,000 profit. So that's just telling you a little bit about me. My day job is I'm a national project manager. I travel from coast to coast throughout the United States, designing and building and maintaining office buildings, commercial real estate. So that shows you a little bit about what I do. And, you know, I manage about $5 million in projects per year. All right, let's get on. Let's move on. What are stocks? Stocks?
Mike, if I can, are you sharing your screen right now?
Yes, you can't see
Okay.
it?
Let's see.
We saw it before.
Okay, let me see if I can try it one more time. I don't use Zoom, so I'm not really familiar with it. I use Microsoft.
Okay. Let me do
I apologize.
There it is.
Okay, I think it was on our end.
Okay.
Okay.
You see it now.
Yes.
All right. Did you see my other slides? Probably not.
No.
I'll go back to.
We saw the very first one where it was.
Okay. Yeah, this is what I was telling you about. You know, I have a lot of experience in stock and options. This is one of my trades, my major trades that I made back in October, starting with 9,000 and ended with 21,000. This is just one of them. And the most that I've lost, for full disclosure, is about $2,000 in one day. But I win more than I lose, which is good. I'm a national project manager, 16 years experience. I design and build commercial real estate, just pretty much telling you a little about me. And I manage about $5 million a year in projects. All right, what are stocks? Stocks are a type of security that gives stockholders a share of ownership in a company. Stocks are also called equities. Stock is a claim on the company's assets and earnings. The more stock you have, the greater your claim as owner. Types of stock. There are two main kinds of stock: common stock and preferred stock. Common stock, is the most common form of stock. Stock entities entitles owners to vote at shareholder meetings and receive dividends. One vote per share. Dividends are not guaranteed with common stock. And preferred stockholders usually don't have voting rights, but they receive dividend payments before common shareholders do, and have priority over common stockholders if the company goes bankrupt and the assets are liquidated. What are dividends? A stock dividend is a dividend payment to shareholders that is made in shares rather than as cash. For example, a company might issue a stock dividend of 5%, which would require it to issue 0.05 shares for every share owned by existing shareholders. So the owner of 100 shares would receive 5 additional shares. Ticker symbols. All securities traded on the stock exchange have a ticker symbol. Examples are Microsoft, Johnson & Johnson, IBM, and the ticker symbols. This is how you can get into the stock. If you want Johnson & Johnson, you would just press J&J. McDonald's, MCD, IBM, et cetera, et cetera. Why do people buy stocks? Investors buy stocks for various reasons. Here are some of them. Capital appreciation, which occurs when a stock rises in price. Dividend payments, which come when the company distributes some of its earnings to shareholders. What type of trader do you want to become? Do you want to become a stock investor? It's really less risky than any other one. Do you want to become a stock day trader? How did I go do that? It's most risky. Or do you want to become a stock swing trader, which is really conservative risk? Types of stock traders. As we just mentioned, stock investor buys stock and hold them for long periods of time with goals in mind. Investors could hold a stock between 4 weeks to 30 years or more, depending on your financial goals and patience. Day traders are typically well-educated and well-funded. They use high amounts of leverage and short-term trading strategies to capitalize on small price movements occur in highly liquid stocks or currencies. Day traders are attuned to events that cause short-term market moves, and day traders usually are in and out of the market in one trading day. Swing traders refer to the practice of trying to profit from market swings of a minimum of 1 day as long as several weeks. So, question for you guys, just to kind of get you guys engaged a little bit. What would we more have as a stock investor? Like if you're trading stocks, what would you pretty much want to trade? Would you want to trade day trade or swing trade, or just be just a regular investor, you know, trying to trade as a long-term investment? Just anybody.
I would want a long-term investment.
Okay, long-term investment. So you're pretty much looking for 20 years, 10 years, something like that?
Yeah, something like that.
Okay. All right. And here's a stock investing example. Stocks really pay off in the long run, no matter if in a bull or bear market or a boom or bust. This is pretty much a graph giving examples of how the stock moves in a trend and upward and downward trends. And since the stock market came to tuition, it's moved up more than it's moved down. So that investing is a good way to make money. And here on this graph, it shows you where we had the dot-com bubble in the 2000, you know, and then the housing bubble and so forth and so on, and how much the market went down, went back up, went down, and then went back up again. And then finally in 2018, we had another crash. And then this past year, we had the coronavirus issue. So that caused the market to go back down and then went back up after, you know, a stimulus was so happened to be given out. This is a day trading example. A day trading, pretty much you start the day either in a trade in the morning at maybe 7:30, 8 o'clock, and you kind of get in, you see where the prices are moving. As they trend higher, you make money, and you actually have a stop loss. If the stock goes down at a certain position, a certain point, you would get out of that trade. But if it keeps rising, you would stay in the trade and collect. All right. Swing trades is basically, you know, trading from 1 day to 2 weeks. So you can pretty much buy a swing trade, you know, in different patterns. So this is pretty much showing you a cup with a handle pattern, a stop loss, and you know, a buy range where you would actually buy in, and we'll get into this a little bit later. But as the prices are going up, this is called a bull market. So it went up, you probably collected profits when you got to a exit point. IPO is an initial public offering, which pretty much is the first time a stock is sold to the public. They're also sold in the primary market. This is pretty much giving you an example of Facebook when they first opened. Gosh, I wish I would have bought that stock when they first opened. All right, primary markets, where stocks are created. A secondary market is where the market securities are offered to the general public after being offered in the primary market, the stock market. And then here's an example of how the primary and secondary markets go hand in hand. The company issues, the company is here, it's not listed yet, and they start the listing, and it goes in the primary market, Then they get investors like millionaires and billionaires to invest in the company, and then they have an IPO, and then it goes to the stock exchange. So this is how the graph of how a stock comes into tuition. It gets listed, and then it goes to us, which is the secondary market. Early investing in IPOs, pretty much, this is showing you if you just had $1,000 in any of these companies, you would be rich. This is like basically an old graph, but actually Amazon, you would be at maybe $2 million right now. You just had $1,000 in 1987. And here's another graph basically showing you about Facebook and how they return over the years, and earnings and things of that nature. So
I have a quick question. So you're saying if I had $1,000, you said,
yeah.
in what year was that?
1990, Amazon in 1997. Yes, if you had $1,000 in 1997, it would have actually turned into $2 million right now. And the next slide I'll show you. Here's Amazon right here. So 1997, 96, 97, it was $1.50 a share. And then at 2010, now it was $240. And then now it's $3,100. So if you would have just bought and held Amazon since 1997, you would have $2 million right now. All right. Any other questions about the IPOs and what happens with stocks that are pretty much coming to tuition?
No, thank you. Not right now. We'll save them for the last 10 minutes, 15 minutes.
Okay.
Thank you.
Exchanges, where stocks are bought and sold. It's the New York Stock Exchange, of course, American Stock Exchange, the NASDAQ, and the Chicago Board of Options Exchange are the main ones. The indices, a collection of stocks representative of the stock market are the Dow Jones. I'm sure everyone once heard of those. Those are the top 30 companies that are pretty much recognizable by Dow Jones. The S&P, 500 largest companies on the U.S. stock market. And the S&P is the most traded and correlated index in the stock market. It pretty much controls the markets in a sense. When you see the S&P go up and go down, the S&P, a lot of times you'll see stocks go up and go down. So we'll get into that a little bit later as well. And the NASDAQ composite is all stocks on the NASDAQ are tech stocks, like Amazon, Facebook, Apple, Booking.com, a lot of the medical stocks, biotech stocks are all a lot like listed on NASDAQ. So that's what that is. Investing in the S&P 500. This is pretty much a graph showing you the returns since 1928 and to 2019. As you can see, the returns range from anywhere between 27% all the way up to 52%. So this is if you were to just put money in the S&P 500. I don't know how I got back there. There it is. You would have just put money in the S&P 500 over time, you would have a nice return. And a cheap way to buy the S&P 500 is an index called the SPY. It trades many contracts on the S&P. So that's another way that you can get involved in S&P. How do you make money in the market? Of course, stock prices go up. And stock prices go down. When stock prices go up and you sell and buy low, sell high, I'm going to give it some examples on slides 15 through 27. And dividends, we talked about a little bit. Not all companies pay dividends, so just have to be aware of that. Why invest in the stock market? Here's a recap. We looked at the boom and bust since 1950 and how the stock market went up almost 300%. The growth of the 70s, President Ronald Reagan era in the 80s, and then the great expansion in the 90s until we had the dot-com bubble. And then the hot ox in 2000, like between 2002 all the way to 2008 before the housing crash. And then we had the post-crisis bull run after the housing market crash, all the way from 2010 to 2020. What causes stock prices to change? Supply and demand, earnings and expectation, sentiments and attitudes, economic indicators, follow the leader, traders just buying on speculation, just buying in the volume, with no valuation. Anything else could be like a 911 situation where the Trade Center buildings got blown up, crashed into by airplanes, or a pandemic or anything like that could move the stock market. Here's an example of supply and demand price cycle. And we'll get into this a little bit too. If you're down here, it's like an oversold situation. This is where stocks are being accumulated because there's no demand in the stock. And then as the demand rises, the stock rises and it's marked up. And then once it gets to the top, it gets overbought. And there's a distribution area where people start taking profits. And then it goes back down and they mark it down as people sell off. It marks down. And then the supply is greater than the demand. And it's just a continuous cycle. Stock prices go up and they go down. Here's an example of supply and demand, a chart. Here's supply at the top, and here's demand at the bottom. At the bottom is showing you pretty much, when people are demanding the stock, once it rises and then it gets in the oversold situation, it comes back down, back to demand. And then the prices rally again, and then they go down again. So this all depends on the market. It all depends on the sentiment and what's going on in the stock market. Earnings and expectations. A company's earnings is after tax, net income or profits, or given quarterly or fiscal year. Earnings are crucial when assessing a company's profitability and are a major fact in determining a company's stock price. Expectations are usually known as guidance for a company profits in the future. So no, future guidance could determine a stock's direction after earnings are reported. So pretty much, we go back to this chart. Earnings pretty much dominate the market and they rule the market. So if a company comes out with earnings, the stock price is typically going to go up a significant price depending on the price of the stock, or it's going to go down. Like say, for instance, if Amazon, I've seen Amazon go up 200 points on an earnings report. And I've seen it go down 250 points on an earnings report. So it all depends on how the stock move and what the guidance is. Why invest in stocks? Recap. The return on investment in the market are 3 to 4 times the annual return of inflation. Savings and treasury bonds. You can make good money in the market. You can also lose money, so be aware. My advice is do not trade with real money until you learn, research, and study your style of trading. Paper trade and a simulated account until you have developed your niche and are very profitable. How should I invest? Recap again. What are your financial goals? What is your risk tolerance? Return rises with risk. So the bigger the risk, the more the reward. And the more the risk, the less the risk, the smaller the reward. Diversity. Don't put all your eggs in one basket. So say if you have $2,000 to invest, don't buy all Facebook. Maybe you might want to buy a medical stock or something different in a different sentiment. So that's what that is. Where do I start? Learn the basics. Set up a brokerage account. Full service versus discount. The internet provides a variety of discount brokerage firms. Do-it-yourself, TD Ameritrade and E-Trade are my personal favorites. And also, I know there's another question is going to be, how much do I start with? You can start with as little as $250, all the way up to $10,000. It all depends on your personal preference. Keep it simple as you learn. Learn about other investment vehicles such as cryptocurrency, bonds, futures, options, and Forex as you grow your knowledge. Keys to success. Pick a style. Learn the discipline. Never trade without a plan. You must have an entry, exit, and stop loss points. Timing is everything. Practice with paper trading again before using real money. Maintain your discipline. Do not jump from style to style. Stick with one trading style. Reading a stock table. Here's there's ticker symbols, there's prices, and we'll get into this too when we get into charts. Prices, your open and close, your net change, your days range, 52-week high and low. Trading volume is very important, especially when it comes to options. Market capitalization, dividends per share, and price earnings ratio. Bulls and bears. A bull market, the economy is great and stock prices are rising, of course. Here's a bull reversal chart where we show the supply and demand. They're demanding that the stock be raised right here. And you can see it's a strong rally from institutional demand. So that's pretty much a bull reversal. Bear market, the economy is bad and the recession is looming. Here's a downtrend, and here's an example of a downtrend market. Someone is willing to buy big, but who is it? All right, basic stock indicators and tools. Support levels known as the floor, support and resistance. Resistance level is known as the ceiling. Simple moving averages. I personally use the 13 and 30 SMA, which is called a simple moving average, and the relative strength index and volume. These are just pretty much basic stock indicators and tools that you can use to get in and time your trade. Simple moving averages, SMA, is also known as arithmetic moving average. Is calculated by summing up a selected range of prices, usually closing prices, and then dividing the sum of the number of periods in that range. This type of moving average can help determining if the prices of a stock will go on or if it will reverse in a bear or bull trend. SMAs are not something you will have to calculate by hand. Many charting tools and trading platforms will have them, and other moving averages built in, so you don't have to calculate any of this stuff. I'll show you how to use it. They show the average of closing prices in the time period they consider, therefore all price have equal value. All right, here's the moving average graph. The purple one is pretty much a bear average, pretty much telling you, and the yellow one is a bull average. So once they cross, that's telling you market direction. If the yellow line, which is the bull, the 13 crosses over the 30, that means is bullish. And if the purple line crosses over the yellow line, that means it's bearish. That's the 30. Moving averages such as SMA will help in entering a trade and sometimes exiting too. It provides assistance with timing, entries, and exits. Relative strength index. The relative strength index, RSI, is a momentum indicator used to technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of the stock or other asset. The RSI provides technical traders signals about bullish and bearish price momentum and is often plotted beneath the graph of an asset's price. An asset is usually considered overbought when the RSI is above 70 and oversold when it's below 30. Here is a relative strength example. Once the relative strength gets over 70, it's considered overbought. And you see at the top on the price chart, you can see once it gets overbought, it tends to go down. And then when it gets oversold, under the 30, it tends to rise, increase. So this is a really good tool that can help you entering and exiting a trade. And then when it gets overbought again, and so on and so forth, overbought, it goes down, overbought again, it goes down. So that's a good indicator. Okay, here's another chart at stockcharts.com. This is pretty much showing you the 30 and the 13 and the 30. The blue line is the 13 moving average. This is a simple moving average crossing over the 30 moving average. And you see once it crosses, the stocks tends to rise higher. Once the red line crosses over the blue line, which is a bearish signal right here, it tends to go down. Here's the RSI again. You see once it builds up over the 70, it tends to go down. And once it gets below 30, it tends to go up. Reading charts. Here's the volume down here. You can see this is actually a 1 hour chart on a company called Planeteer, ticker symbol PLTR. I actually traded this stock last week, did okay. You can see as the moving averages crossed over, it was telling you the blue line crossed over the purple line. It's telling you to buy. That's a good buy signal. Bought right here, sold at the top right here. So that's about $2.50 move on a $25 stock. It's pretty good. These indicators right here is called the Squeeze Pro. I use these from one of my mentors that introduced me to them. The squeeze is pretty much a compression of energy, change in reversal signals. That's what those are. So what I can do right now is I can pretty much grab the charts and go over charts. Would you like to do that?
Yes, we would. Yes, we are just
eager to learn about
this. Is a lot.
charts.
We're unpacking it all and just, trying to apply it to our trading efforts.
I didn't want to overload you because there's a lot to it. Let me grab my charts here.
You're doing really good.
Yeah, this is just great. This is you're very knowledgeable, very informed on this subject.
Okay, let me grab my charts here. Let's see. I can grab them.
And I guess I'll just say that when you said I guess I'm trying to see when you are saying that people buy so much of a product or of a stock, it's going to basically go down, and when it's oversold, it's going to go down. The value is going to plummet, I guess.
Yes, not always, but it's a 85% chance that it's going to go down.
Okay.
In my
So yeah,
experience,
that's what I'm trying to apply to my selling.
yeah,
My buy.
yeah.
Okay.
80% chance that it will go down. You just have to be patient, especially if you're an investor. That's the best way to trade.
Okay. Okay. So for those of us trying to make quick cash as opposed to the long term.
Yes. If you're trying to make quick cash, swing trading is what I do. Day trading is risky. I do it sometime, but it just all depends on the day and the market conditions.
Okay. So yeah, this is great. I'm just learning all the different types of trading. There's not just one type of trading. There's all kinds of different trading.
Different types
Yeah.
of trading.
Yeah. And diversifying your stocks and your investments is the way to go.
Yep.
Okay.
Let's see if I can pull this thing up here.
And the bear and the bull, that was good stuff. That was very informative.
Oh, thank you.
Yeah, it's very detailed.
Yeah, this is just everything that, I imagine. I like the breakdown of all of the stocks and how you taking your time to explain it, because a lot of this stuff, just the basics of it, we can't know. I mean, we don't know, and we have to know this if we want to do some, trading.
Yeah, you're breaking it down in layman's terms for the general public, for us to understand.
And this is very basic,
Right.
There's a lot to learn. It took me, 10 years to and I'm still learning, after all these years.
Okay.
So would you say the best time to pull your money out or trade your money once it goes up, if you see a couple dollars go up? Or
I think that pretty much is for swing traders. If you're looking into a long term, then set it, forget it. Like, it just all depends. Like, if you're looking to get into a stock, like, I don't know if you ever heard of Tesla. Tesla is a car company. Everybody's heard of Tesla, but Tesla's a electric car company. There's a new company out that's replacing Tesla from China. It's called NIO. And that's a stock that they're projecting that stock to go from like $50 all the way up to $800 within the next few years. So that's the up and coming stock. If you're looking for a stock to just say, I want to put $1,000 in this stock and I just want it to go up to $800. And once I collect, once it gets up to a certain point, then you can pull your money out. Say over years, you might make a few $100,000. Great.
okay.
But if you're looking to swing trade, this is basically telling you, if you're swing trading, get in and get out, take your money, because the market's not guaranteed. It could go up, and then once people think it's going to continue to go up, that's when it goes down. You got to do what everybody else is not doing. Like, if the stock is, when it goes up, people are thinking the same thing that you're thinking. They thinking it's going to keep going up. But institutional investors, the big money, the smart money, the billionaires, is pulling out. And you don't know it because they can only pull out a certain amount of stock at a time. But by the time they pull all of their stock out, which I'm getting ready to show you, the stock plummeted. And then you're left looking, scratching your head saying, what happened? What I mean?
I see. Yeah, speaking of those guys, Facebook and Tesla, Mark Zuckerberg and Elon Musk, those two guys, they're headed to be billionaires. I think Elon Musk just took over Mark Zuckerberg.
Yep.
So I mean, yeah, this is the way these guys are not only creating the product, but diversifying their portfolios to actually make more money, not just the product.
Correct. That's exactly what they're doing.
Okay.
And of course, Zoom, I'm not familiar with this. I gotta trying to figure out how to put sure.
You're doing great. This is great. Yeah.
Where is the screen share, Mike? Oh, okay. I'm working off of like 3 different screens. That's why I'm looking around.
Take your time.
Okay.
All right, there it is, screen share. All right, which one do I want? Okay, let's go to this one here. Okay, can you see my charts?
Yes. Yes.
Okay.
We see 4 different charts.
Okay, I'm gonna concentrate on the one up here.
Okay.
Here's a PLT chart. I'll go to a daily chart here. And as you can see, PLTR is a new stock. And here's my simple moving averages that I was telling you about. This stock started at like $9. And now it went from $9 all the way to $33 within a matter of 1 month. So you can see, and this is an up and coming stock. It's a tech stock as well. I find these stocks from just my mentors and trending and doing some research on them. And you can see once, you know, by the stock being so new, we didn't really have the point of where the lines cross, but the bullish line kept going up, which would tell you to keep buying the stock or stay the course. You can see as the stock got overbought, it went down. It went from $33.42 all the way down to $21. See what happens when the investors pull out and you're thinking it's going to keep going, and once it stops, it came back to the mean, back to $21. And have you ever noticed that stocks always take longer to go up, but takes a shorter period of time to come down? So keep in mind that when the stock is rising, it goes up like a escalator, but when it comes down, it goes down like an elevator. So it goes down faster than it go up. And if you we go back to the S&P 500, and this is pretty much what controls the market. Remember what happened with the pandemic? You see the crossover here? Let me zoom in. Let me zoom in. Okay, see what happened? Look at this. This is telling you that the direction of the market is changing. When we get the 13 crosses over the 30, there it is, there's a change, and it kept going down. See that? And then once it got to the bottom, now it's oversold, and then it starts to rally again. And then there's your crossover. And if you want to just stay out, this is an indicator that'll keep you out until you get your crossover again. Once you get your crossover, it goes right back up. See how valuable this tool is?
Yeah, this tool, what tool is this? I do see, I'm on Robinhood.
SMA. This is the simple moving average. We were talking about the simple moving average. That's what this is.
Is this in an app that we can download ourselves?
Yes, it's free. You can go to stockcharts.com, and as a matter of fact, I'll go to stockcharts.com and I'll show you how to put it on your chart. I'll show you that in a minute.
Okay.
And this is why, what's that?
I do know in Robinhood apps like that, they do have that 52-week market trend too. I'm guessing, is that similar to this or is it different?
Yeah, it's the same because this is a daily chart. A daily chart pretty much measures every single tick for 1 year. That's what a daily chart does. There are different time frames. If you can see this, different time frames measure different activity in the stock. Like say for instance, if you want to go, the daily is 1 tick per day, which this is 1 day, this is 2 days, this is 3 days, the third day, et cetera, et cetera. But if you want to go, you want to say, you want to see what the stock is doing every 30 minutes, you can break it down to see the movement in the 30-minute pattern. So if you go to like say 1 hour, you can do that as well. You can, every single time this stock moves, every 1 hour you get a tick. See that?
Yes.
So 1 hour, 2 hours, 3 hours, 4 hours, 5 hours, 6 hours, 6.5 hours.
Mm-hmm.
So that's how it works. A lot of people won't tell you this. If you go to 15 minutes is to tell you the same thing. And there it is. Look at this. If you're day trading or swing trading, 15-minute chart works great. Once we get that crossover from bullish to bearish, you see it went down.
Mm-hmm. Okay.
All you had to do was get in this trade intraday. This is not rocket science. But, you know, nobody will tell you this. So it took me a while to learn how all this works. But, and then you
yeah, the more you're breaking it down, I'm getting it. It's the
yes,
watching the trend and knowing what
1 minute, a minute chart. Look at this. A minute chart shows you the whole day. 1 minute, every tick by tick, every single minute, there's a tick. And we zoom in a little bit here, you can see what happens. What happened Friday. This is Friday. The stock went up, it crossed over, and it crashed.
Mm.
And this is what day traders usually use. They use a 1 minute chart because they go tick by tick. So anything between a 1 minute all the way up to 15 minute can be used for day trading. 15 minutes and 30 minutes can be used for swing trading. All the way up to 1 hour can be used for swing trading. So 15 minutes to 1 hour can be used for swing trading. And 4 hours all the way up to 5 months. Well, a month, which is 5 years, can be used for investor type trading, which is if you're a long-term investor.
Okay, got it. And what's the name of the website you said too?
It's stockcharts.com. I'm getting ready, and I have the references on it's going to be on my transcript.
Okay, awesome.
So if you look at this is pretty much the Thinkorswim platform from TD Ameritrade. You know, right here, it gives you the ticker, what the index is, the price of the stock, how much the stock went up or down for the day, right here. And it actually went down 0.37% for that day. Mm-hmm. And if you go down here, here's the volume. It tells you, remember, we're going to get into volume a little bit more when we get into options, but volume controls options premium. And I'll share that a little bit in detail, but the green bars are pretty much telling you that the stock is bullish. There are more buyers and sellers on the volume forefront. The red is telling you there are more bearish buyers sellers in the forefront at the moment for that minute. So this is what this is at the bottom, the volume. And over here, the volume, it tells you how many shares are traded per minute. So right here, this is 200,000. That's where the line is. See this, 234,000? That's the line. And also stockcharts.com will show you this too. So on the free charts that you get. So this is what this is. The squeeze, like I told you, I'm sure this won't be my last webinar. I'm willing to donate more of my time. So I'll share the squeeze. This is a little bit more in-depth subject here, but it really helps as well. And we already talked about the price sentiment. Just say, for instance, if you're in here and you want to trade, and on Thinkorswim platform, you just pretty much, if you want to buy the SPY, you just press buy. And I don't know if you can see where my order came up, but you can do that. And then if you're selling options, just as a little bonus here, you can go to trade, and we'll get into this a little bit later too about the options chain and strike prices and expiration dates and what's a call, what to put, that sort of thing. So, is there any questions about that, or you want to probably say to the end as well?
Yeah, we
Well,
have a
about
few
the
questions.
stock, I know you said NIO and PLTR were a couple stocks that we should look at that are on the rise. Do you have any other ones that you would like to mention that are on the rise?
Yes, let me show them to you right now. All right, OCX is my first one. Let's go through them one by one. There we go there. Okay. Here's OCX. This is pretty much, you see what it's been doing for the past, since July. It's been going from, really August is when we got the crossover. So let's zoom in this right here. Here was the crossover. You can see it. And once it crossed over, it didn't stop. So if you're an investor, this was a great tool. This stock was only $1.44, which right here, it tells you the open, the close, how high the stock is, how low it is, and the close, and the year to date, how far it went up. So, and we're on the daily chart right now. So this is actually tick by tick. Mm-hmm. And you can see the volume, how the volume is starting to increase.
Okay.
So that was one of them. But what I would do with this one is wait until you get a pullback. A pullback means that it's going to come down to a level where you can rebuy it again. Mm. Makes sense?
Yes. Mm-hmm. Yeah, I'm getting that.
So this is my favorite stock here. It's NIO. It's the Chinese company, like Tesla. They've actually developed a car, an electric car it's going viral right now. And let me see if I can get this up without stalling out on me.
So I have another question too while you're looking that up. My question is, let's say the stock is at $34.50 and you only have $50, but you want to try and put, some money in different places. Is it good to put that, just to put $10 in that stock and it's at $34.50? What I'm saying is it good not to put the
full stock, buy a full stock, full share, the full share.
Share. That's the word I'm looking for.
I'm kind of lost you. Say that one more time. So let me turn my volume up here.
So if, let's say the share is $34.50, right? $34. And I only have $10.
Okay.
So am I buying, I know I'm buying a small portion of it, but is it best to do that, or is it best to wait till I have the full amount of the share?
I will wait until I have the full amount of the share. I know Robinhood does partial shares. I think they do. Because I don't trade with Robinhood. I trade with Ameritrade and E-Trade because those are my favorite platforms. But I would really wait until I got the full amount, unless you're trading something like Bitcoin, because Bitcoin, you can't even buy a share. They're $34,000 a coin now. So,
okay. See, the reason why I asked that, I do have Robinhood and I did invest, like I was saying, I forget which share it was, but it was like $34, and I only invested $10 because the other shares I wanted to put more into it. So I wasn't sure if that was a good move, or you're saying it's best that you just wait till you have the full share.
Yeah, I that's my opinion. Like I said, if you're buying $10 and it's $30, you're $20 short, right?
Right.
So yeah, I mean, I would just pretty much wait, because, you know, is it really worth your time if the stock went up, you know, like $5 or something?
Okay, I see what you're saying.
Get where I'm coming from?
You're only getting a certain percentage. Well, yeah, I was thinking, well, you're not getting the full amount of the increased share, but you're only getting a snippet of it. Well, maybe it's okay to get the snippet, but you're saying it's best just to wait till you get the full value of the share
Yep,
to invest.
yep.
Okay.
My personal opinion. Everybody have a different, just a matter of personal preference. See
Are
if
you sharing any screens right now?
I had to reload my screen. I'm really sure. Pull it back.
Okay. So I like what you said about when there's, or when you showed us a diagram of the chart of there being lots of buyers and few sellers. That's when you want in on a stock, or that's when you are, if you have a stock, that's a good time to have that stock and sell it.
Yes.
Okay. Okay. Great.
Okay. Let me share one more time.
Okay.
Where am I? There it is. Let me share. Now I'm getting the hang of it now. I'm getting there.
Yep, we're sharing your screen.
Okay. Here is the test, the next Tesla. This is what I was telling you. Okay. This stock went from like $2 back in May, and now it's $60. And it's gonna be Tesla. So if you compare it to Tesla, let's put Tesla over here. So I can spell it right. So let's go to Tesla, the daily chart. Okay. See what Tesla's doing? Because everybody's going green now because of the innovation. It was $100. Actually, the stock split 5 times. So this stock was almost $2,000 a share, but after it split, it still went on a tear. It went from like $480 after the split to $800. It went up $400 since September. And this is the electric car company in China. So they're going to be selling, they're projected to sell the same amount, if not more, cars than Tesla. And this stock is only $59, right? Well, $56 right now. And that's the current stock number 2 that I picked, that I'm recommending. But you see that? See the difference? So, and it's starting up now.
Right.
And you see Tesla's pulling back just a little bit. Zoom in a little bit here. Tesla's pulling back a little bit, but it's going to continue to rise. And you can see there's a crossover again, the 13 and 30 SMAs. Once it crosses over, it went on to.
So if I'm looking at both of them, comparing both of the charts, it looks like NIO is spiking higher, but Tesla is spiking increasingly, but more stable.
Yeah, it's stable because Tesla already made. Remember when I was telling you when everybody's still buying? Tesla
Right.
still buying.
Mm-hmm.
because it made a significant move higher.
Mm-hmm.
Especially, you know, it was $2,000 a share and it split 5 times. Now it's only $800 because from the split, and it went up. Now it's a matter of time before it pulls back to maybe 750, and then it will go back up again. We'll get another crossover, and then it's start back over again. That's why I like swing trading, is because it gets you out. You can see your money in your hand, and then once it's time to get out, you get out. Back. You know what I mean? Does that make any sense?
It does. It does make sense. Yes.
And that's how you acquire wealth, because you're saying, okay, I don't want to take that risk of the stock going down, and if the stock goes down, then I can lose some of my money. But if you're an investor, when the stock goes down, that's a great opportunity to buy more shares.
Mm-hmm.
So you have 2 options. If you're an investor, once the stock goes up, you're making money, you can either take your money out, wait for a pullback, get back in, or you can keep the stock, and once it pulls back, just buy more shares, just add to those shares. And then when it goes up again, you're accumulating shares.
$9, you put the money in. If you buying the shares, you put 2, 3, 4.
You got it?
Yeah, I'm
Yes,
getting that.
yes, we are getting it. Mm-hmm. We just digesting it all
Yeah, good.
We're trying to follow along at we're
at this
looking,
juncture. Yeah.
right.
So yeah, I mean, for someone like us, or people out there, the Tesla is reading as like 823 and some change and some share, and NIO is reading 56. For someone new who's coming in, NIO is is a good way to go. So yeah, that's where we're looking at. If you don't have, I guess, lots of money, or $800, if you don't want to put such a risk into Tesla, then NIO is comparable to Tesla.
Yep.
And
But
so I'm sorry, go ahead.
every stock, let me give you an example. Every stock has a correlation stock to it, attached to it. Like, say for instance, if you're talking about AutoZone, I'm sure everybody's heard of the car parts AutoZone. They're on
Yes.
A correlation stock to AutoZone, like say for instance, let's pull up AutoZone just for a quick thing. AutoZone is $1,200 a share. See the difference?
Wow.
Yeah. But if you really want to play that sector, you can trade O'Reilly.
Mm-hmm.
You see, O'Reilly's only $400, or you can trade Advanced Auto Parts.
Mm-hmm.
So, and see the difference? Advance is only 165, but it correlates to AutoZone.
Mm-hmm.
So it's a cheaper way to get into the auto parts industry, but you don't have to spend a whole lot of money. See that, and they look exactly the same. This chart, this is Advanced Auto Parts, and this is AutoZone. This chart is almost exactly the same pattern.
Wow.
Isn't that something?
Yeah, it is.
That's what I've found over the years of trading. I had a lot of aha moments. I said, man, why would I trade AutoZone when I can just trade Advance? It's a cheaper way to get in with options, and I can make some money, get in and get out. Once it crosses over, I can get in and get out, and that's it. Look at this. Look at this crossover. Look at this.
Wow.
It's a crossed over. It went up. It went from 151 to 162. That's $10. That's a lot of you playing options.
Yeah.
It took 1, 2, 3, 4, 5, 6 days.
Mm-hmm. Mm-hmm.
So if you're just pretty much swing trading or long-term investing, you can wait for a crossover without really risking a lot, and let it go up, have a target price. Once you see it hit my support and resistance line, that was the time that I would get out of this trade.
Okay.
See that? Right here.
Yeah. Mm-hmm.
This support, and this is resistance. So support would be at the bottom of the chain, like right here. Here's the support line right here at the bottom, and that can also mean what? It can mean supply. Demand. People are demanding that the stock rise, right?
Right.
Once it gets to the top, this is called resistance. This is the ceiling. Now the stock pulls back. See that?
Yes, we see.
Here you can say, and it crossed over here on AutoZone as well. Here it is. It's a little bit, but you know, it still did go up. But this is a lot more cleaner situation than this, but it's the same.
Okay. Okay.
So, you know, the travel industry is the same way. Booking.com is $2,200 a share, but a great way to trade the travel industry would be the Expedia.com. Expedia.com is only, you know, $140 a share versus $2,200 a share. Is the difference? So, and here's Expedia.com on the right side.
Okay.
But yeah, it went down Friday, but it's going to pull back and it'll go up. And any other questions before I go to the next stop?
Do you have any questions?
I do, but
No,
my question I can wait for my question towards the end.
You sure?
Because my question was just gonna ask if someone wants to start trading, what's the best route? And I think you answered that before. You said it's best to start trading with paper money.
Yes.
And I wanted to know if you could give that example of paper money. Or
Yes. I can go to a simulated account and show you how you can get in. And another way to start investing too is penny stocks is a great way to invest. Like, say if you want to get into a stock for, you know, an affordable way to get into a stock today and get out, to say today is Monday, and you can get out by Tuesday, Wednesday, but no later than Friday. So, and penny stocks range from anywhere between 1 cent all the way up to $5, which is affordable. And the difference between penny stocks and stocks like NEO, you know, higher price stocks, is you can buy a whole lot of shares. You know, if the stock is, you know, $1 or 10 cents or cent versus buying, you know, NEO, and you only have $1,000, you can only buy maybe 15 shares. See the difference? But if you buy a stock that's $1 and you have $1,000, you can buy 1,000 shares. And when it goes up, the bigger the risk, the higher the reward. So once it goes up, you're going to make more money with it.
Well, thanks for answering that question, Mike. Before we get into the options hour, we have people asking how they can get in contact with you. I believe you're going to share some details at the end of your options hour.
Yes, I will.
Okay. Yeah. So he's going to tell us how we can get in contact with him at the end of his options hour.
Yep. Okay. All right. Let's share my screen for this. Okay, there it is. Okay, can you see my screen now?
Yes.
All right, these are the stocks. It'll be in the transcript there. All right, do we want to go to options? Just straight to options now?
Yes.
Okay. All right. Options versus futures. This is just a little bit extra. Options give the holder the right to buy or sell the underlying asset at expiration. Futures contract is the obligation to fulfill the terms of a contract. Options is a privilege sold by one party to another that gives the buyer the right to buy or sell a stock at an agreed upon price within a certain time period, or on a specific date. Futures, a financial contract obligating the buyer to purchase an asset at the predetermined future date and price. All right, option basics. Another definition of option is a derivative security because the value of the option is derived from the value of the underlying common stock. There are two basic option types. There's the call options are options to buy the underlying asset, and put options are options to sell the underlying asset. Okay, basically a call option, you're expecting the market to go up, sort of like stocks, or going long, which is a bull, and a put option is a bear. So you're expecting that the market is going down. And let me tell you something, a lot of my trades have paid a lot of money from the stock going down, not going up. Remember I told you, stocks, when they go down fast and hard. But when they go up, they kind of tick. You know, they go up steadily at a steady pace. They go up like an escalator and go down like an elevator. Listed option contracts are standardized to facilitate trading and price reporting. Listed stock options give the option holder the right to buy or sell 100 shares of stock. So, the difference between options and stocks is if you buy an option, you're only buying one share at a time. With options, you're getting into a contract to lease to sell the option to buy 100 shares of that stock. Does that make sense? So one contract, an option contract equals 100 shares of stock. Of that particular stock. If you know, options are funded are fueled by volume, and volume equals premium. And I'll show you that as well. The option contracts are legal agreements between two parties, the buyer of the option and the seller of the option. The minimum terms speculated by stock option contracts are the identity of the underlying stock, the stock price or exercise price, the option contract size, the option expiration date, or option maturity. The option exercise style, American or European. The delivery or the settlement procedure. Stock options trade by organized options exchanges, such as the COB, which is the Chicago Board of Options Exchange, as well as the over-the-counter, which is OTC options markets. A list of available option contracts and their prices for a particular security is known as the option chain. Free option chains are available online through many sources, including the Chicago Board of Options Exchange. I have the quote here. And your online broker, whether it be TD Ameritrade or E-Trade or Robinhood or whoever you're trading with, and Yahoo Finance. Here's a option chain example on my Thinkorswim platform. And I'm going to go over this a little bit after I kind of go through everything. And I'll show you how the option chain works and the difference between stocks and options. Here's an example of options quotes. Here's a Starbucks pretty much telling you the last trade, which was $26, the price of the stock, the time, how much it changed. You know, it went down 39 cents or 1.45%. The previous close, which was yesterday's close, it opened at 26.68. And the bid and ask. The bid is actually how much somebody's trying to sell the option for. The ask is the price that somebody's trying to buy it, which you would be trying to buy it for, whether it be a call or a put. The days range, it gives you the range between 27.43 and 26.75, which is the daily range of that stock, which is maybe 40 cents at that time when I took the snapshot. And the 52-week range was just telling you for this year, how much is it predicted to move? If it's at $26, it's expected to move up to $40. The volume, we looked at a little bit about the volume. The volume is pretty much telling you the shares, one share, how many shares are trading at the time. The average volume, which is the average volume of, they take an average of how much volume is going on, market cap, and so on. So if you look at this call options chain, we have, if you look at the yellow area, this is called the in the money. So if the price is $26, anything over $26 is going to be in the money. Anything that's right below $26 is what they call at the money. And anything that's kind of further out, like deeper down here, where at 35, 36, is called out of the money. So those are the terms for options when you're looking at either call or puts. Remember, call, we're expecting the prices to go up, and puts is expecting the prices to go down. So puts, you can see the puts are in the opposite direction, and the money is going is in the downward position because the stock, you would expect the stock to go down. And at the money is 25, and then out of the money is 17. The furthest out of the money is 1750. Okay. So let me see. Why options? A basic question asked by an investor is, why buy stock options instead of shares in the underlying stock? Okay. The answer to the question, we compare the possible outcomes from these two investment strategies. We buy the underlying stock and we buy the options on the same underlying stock, and I'll show you an example of it. Here's a buying example of buying a call versus buying the underlying stock, because we're expecting the prices to go up. Suppose IBM is selling the stock for $90 a share, and the call options with a strike price of $90 per share. The strike price means that's where you expect, that's where either the stock is at the money, and you're expecting it to go up of the $90 or $5 per share. So with the strike price, and okay, let me go over it. And call options with a strike price of $90 a share or $5 per share, which, remember, one stock, a contract equals 100 shares, so that would be $500. So investing for 100 shares of stock of IBM would be $9,000. But if you bought one contract of the call listed, it would only be $500, because 5 times 100 is $500. Suppose further that the option expires in 3 months. Finally, let's say that in 3 months, the price of IBM shares will either be $180 or $90. Let's take a look. Okay. Let's calculate the dollar and percentage returns given each of the prices for IBM stock. Based on $90, remember the price of the stock was $90 and share price, and we bought the 90 strike on the call option. So if you look at this, it would take you $9,000 to buy 100 shares of IBM. Case one, if the stock went up $10 from $90 to $100, you would actually have to put up, you would only profit $1,000, but you had to come in with $9,000. But if you bought that call option for $500, you just doubled your money. So you bought it for $500 and it went up to $100, you made 100% return on your investment. So now you would take home $500 plus the $500 that you started with. That's $1,000. Case two. Case two. If the stock went down from $90 to $80, you invested $9,000 on the stock. You lost $1,000, and you lost 11%, and you would go down to $8,000 because you lost $1,000. But if you, at the same time, if that option didn't work out, you would lose the whole thing. You would lose $500 of what you invested. So the $500 you would lose, but over here, you would still lose $1,000 out of the $9,000 you invested. Case study number 3. What if the stock didn't move at all? You would leave, and it just stayed at $90. It was trading sideways. It never moved. You wouldn't lose anything. You would keep your $9,000 investment. And if you invested $500 and it stayed at $90 and the option expired worthless, you would lose the whole $500. Make sense?
So
Yes.
if I'm looking at it, looks like we would go with case number 1.
But
Yeah.
we would hope for case one.
Yeah, that's pretty much expected that stock is going to go up $10. Say, for instance, if you bought a 2-week option and the stock didn't go your way for some odd reason, the most you can lose is what you invested in the stock, which is $500, and the option, which is $500.
Okay.
Okay.
All right. So
Yes.
why options conclusion? Whether one strategy is preferred over another is a matter for each individual investor to decide. That is, in some instances, investing in the underlying stock will be better. In other instances, investing in the option will be better. Each investor must weigh the risk and return trade-off offered by the strategies. Okay? It is important to see that call options offer an alternative means of formulating investment strategies. For 100 shares, the dollar loss potential with the call option is lower. For 100 shares, the dollar gain potential with call option is lower. The positive percentage return with call options is higher. The negative percentage return with call options is lower. Here's some of the trading, top stocks for trading options. We got Google, because what I was getting at with this is options make trading affordable. If you want to trade like Apple, Facebook, Google, you can get in. You can get in for $200. Sometimes I've seen these options for $100. And I do personally, I buy options for like $50 at a time. And I bought options on a Friday for $10 and sold them at the end of the day for $100. So it just all depends on your trading strategy. Option trading styles are the same as stocks. Options investor is less risky because you're going farther out. Remember, if you're going farther out, you're buying premium, and I'm going to show you that in a few minutes. If you're buying premium, the more the option is going to be. If you're buying an option that expires in 1 week, your option is going to be cheaper. But if you go farther out for 1 month, your option is going to be more expensive because you're buying time. Okay? Option day traders is the most risky because if you get into a trade and the option expires today and the trade so happens to go the opposite direction that you're trading in, you can lose the whole thing. Option swing trader is, of course, conservative because the swing trading is maybe buying the option expiration for 2 weeks or so. So you're good with that. Any questions before I go into my charts and option chains and things of that nature?
So the underlying option of a share, that's what you were explaining to us, I guess? That's why we would do an option versus just a share.
Yeah. Again, it all depends on your trading style and your risk tolerance. If you're looking to be a long-term investor, by all means, go with stocks. But if you're looking to get in and learn more about options, I would really personally recommend, because your risk to reward, I mean, your potential profit is way higher. Like, say for instance, you're only investing $500, like I showed you in the example. You're only investing $500 versus $9,000 to buy the same stock, and you come away with $500 at the end of it. By the time you sell that option to somebody else and you get out, you make more money. That's the key. But if you're just looking to be an investor, trade stocks. It's way better.
Okay, got it.
I'm just giving all type of examples.
Okay.
So you can make a decision on what type of investor you want to become.
Okay.
Yeah, this is very helpful gems that you've given us.
Oh, thank you.
Thank you.
Let's go into charts a little bit. We can spend some time on this. Do the screen share. Where's my, oh, there it is. All right, let's go to the option chain. Let's say, for instance, go to trade. All right, here's the option chain. Let's go on to a stock that's more affordable. Let's go back to NIO, that Chinese car company. So just say, for instance, we got a pullback. We didn't get a crossover, but we did get a pullback. Just say, for instance, you want to buy the option that expires next Friday. You see the difference between the stock and the option? If you buy an out the money option, you can control 100 shares for $255. You're talking about leverage. See the difference between stocks and options? Whereas if you bought the stock, if the stock went up $10 and you bought this option at 56, the strike price of 56.5, now what happens when it goes up $10? Guess what? 56. You made $800 if this stock goes up $10. But if you bought the stock, you're only going to make $8 of how much how many shares you bought of the stock. Make sense?
Yes.
See the difference? See the power of options?
Yeah.
I would not recommend buying options deep out of the money unless you know what you're doing. If you've done your research and you know what the expected moves are. The expected moves on Thinkorswim is right up here. You see where I'm pointing at? It says $5.91 plus or minus. That means that this stock is projected to move up or down $5.91 by next Friday.
Mm-hmm.
Make sense?
Yeah.
This right here is the ask. The ask price is basically what you can buy the stock for. The bid price is what someone is trying to sell their option for. Make sense?
Okay. Yeah.
Okay. Money, we talk about at the money, in the money, so forth and so on. Anything that's in this shaded area is in the money.
Okay.
And right here before the shaded one is at the money. And anything below that is out of the money.
At the money. Okay. Mm-hmm.
Okay.
Okay. Mm-hmm.
Here, what moves? And another key point for options is basic stuff is to say, for instance, if you buy an at the money option, call option, you're expecting the price to go up, it's telling you that the probability of this trade working is 54%.
Mm-hmm.
Okay, that's why I don't deal with out of the money options. If you go down, now if the deeper you go out of, this means you got an 80% chance that this stock is not going to work.
Mm.
I really don't like out of the money options unless I know there's a sentiment or trend change or earnings or something coming. And then I might go in and I'll say, okay, I can buy just looking for volatility to increase so that price will rise. So if you look at volatility, you see where it says implied volatility?
Right.
Percent means that 91 is really high. That means that this option is in demand. If you look up here, back up here where I showed you the expected move, you see where it says implied volatility? This is what drives the stock. The more this volatility goes down, the less the option price becomes. So just say, for instance, if the volatility goes down to 50%, this is going to go down to 125 because it went down 50%.
Mm-hmm.
See what I mean? So that's how that works.
Okay.
Delta, this means that is when it says 0.5, that means that every dollar that the stock rises, the price of this option is going up $50. So every time this stock rises $1, it's going to go up $50. That's what that is. The left over here is telling you what someone bought the option for last. When before the market closed, someone bought this option for $2, which is $254. It says $2.54 because remember what? One option equals 100 shares. So that's, in our terms, it's going to be $254 we paid for this option.
Mm. Okay.
Makes sense?
It does. It does make sense. Yes.
So if you go deep out, just say, for instance, you're a long-term trader. All right? Just compare. This option at the money that expires in 6 days, expires January 22nd, which is the next Friday, is only $255. Now, if we want to go out to February 19th expiration, we have 34 days, but look at the difference. Now the option is $560 because guess what? We just bought more time for the option to work. So the longer you go out, the more expensive the option is going to get because you're buying time. You're giving the stock a chance to work. Makes sense? So you're giving it 34 days to say, it's going my direction. And if you look over here, the implied volatility is a lot more because they're expecting this NEO, just like I said, to move higher. Makes sense?
Yes.
I'm
Absolutely.
following. Mm-hmm.
So, and you can buy an option all the way up to January 2023 if you want. You look at that, now you're going to pay, you're buying more for time. So you have $2,800, you can buy this thing and just expect it to go up. You're expecting it to go up $800. This is not a bad deal because it's only $60. And if this thing goes up to $800, it's off the chart.
Mm-hmm.
Basically, it could go up to $100,000 in the time that you're with in 734 days. So this is, I know a lot of investors, big investors that will just buy this option and just hold on to it until it goes up, you know, $200, $300 and forget about it. That's an investor. See the difference?
Mm-hmm.
That's what it is.
Okay.
So is there anything else on options you wanted to see? Up here, here's the low to say, here's the low for the day, the high for the day, how much it opened, the volume will tell you a lot. You know, how much the stock changed, so forth and so on.
No, I'm just reconciling it with, I guess, the legal field, the options and the first right of refusals and first right to sell, and how it's beneficial in this scheme of things, in the financial scheme of things, buying an option along with a share.
Mm-hmm.
Okay.
And you know, some people, it's another subject, but some people, what they will do is, if you have 100 shares of stock, say you're buying 100 shares of Nemo, and you spent, you know, whatever 100 shares cost, what you could do to leverage that stock, a lot of people leverage it by buying a put option just in case it goes down. Just say, for instance, if you're a long-term investor, you go out, say 90 days, and you bought 100 shares, you can they will actually give you a put option that for free to leverage this stock.
Mm-hmm.
It's called a covered call or a covered put.
Okay.
You can cover your stock by buying a put or a call in the same underlying stock, or actually you can sell one. Just say if you've got calls and you have the shares and you're expecting stock market to rise, you can sell any out of the money and let it, and when it expires worthless, guess what? You keep whatever you sold. So say, for instance, if you sold the deep out of the money options for $200, and at the time when that option expires and it never gets in the money, you collect $204. And this is with us. Like, say, for instance, buying stocks and buying options, when we buy buying calls and buying puts, when we buy the call, there's somebody selling it to us. There's always a seller when we buy it.
Okay.
So those are the people who are selling. They're not expecting the price to go in your direction. That's why they're selling.
Oh, I see. Okay, that makes sense.
So that's the example of that. Let's see if there's something else. If we want to look at another chart.
Well, someone did ask about, and we did cover this in our previous discussion. Not today, but we did ask about Forex. Someone is asking if you're going to go over Forex. And no, we didn't discuss going over Forex, just trading and options. But Mike, I don't think you had you don't do the Forex or.
No, I did not trade.
Right.
I'm not a night owl. Yeah, Forex, they pretty much open for trading at like 11 o'clock Eastern Standard Time, 11 or 12 o'clock or something like that at night.
Okay. Mm-hmm.
Something that I'm not really familiar with it. I know the chart patterns, but I don't trade it.
Okay. So yeah, we're not going to discuss Forex because that's not Mike's forte. But did you all have any questions? I guess we can just ask our questions. Now, did you have more on options?
No, that was it. I just wanted to be basic as possible so I don't confuse anyone.
Okay.
No, it was pretty basic.
Yeah, it was broken down, detailed enough, and easy enough though too for us to understand, to get a better grasp. Those comparison charts really helped me out on if I'm coming in with a little money or paper money, what to look at and what stocks are already out there and what not to buy. So, I mean, my other question then too, going back to Tesla versus NEO. So I know I get dividends from certain stocks. That's fine. But is it beneficial for me to invest in something like Tesla now that it's everybody's already investing in it? If I'm paying $800 for it, am I going to see much more increase? We don't know the stock, what the future holds for the stock, but is it really beneficial to invest in something that's already popular and already stable? Am I going to little RIO?
If you're doing options and it pulls back and you get a crossover, by all means, yes.
Okay.
But if it's $800, no, I would not touch Tesla with the 10-foot pole.
Okay. Yeah.
And
Yeah, that was my question. I was buying like Walmart and looking at Amazon, things like that. Those are already high and already stable. It's like, how much return can I get from that at this point?
if you're in it for the long term, it's good. But if you're in it, it's going to take a while before you see your returns.
Okay. So the best way to approach it is to look at those charts and see the history of like the newly formed stocks and shares companies, and just you have to really dedicate some time to doing it, to actually looking. And giving us these charts was the best tool, I believe, the best approach to take to learn and jump in.
Yeah,
I agree.
Yeah, it was good.
and never trade a stock without a chart. I
Never
never
trade a stock without a chart.
buy stocks because their brother-in-law told them that Tesla was going up, and I had no idea where the stock price was, and it was at the top, and when they bought it, they lost all their money because it went the opposite direction.
Mm-hmm. Okay.
You know what I mean?
Yeah. And I guess to look at the tables, of course, and I guess the market trends. Is that something you do too? Like I know in California they have a law that's in place but set to take effect. It's not in effect then, but in the future their car vendors can't even sell persons cars that have gas. So everyone's gonna have to transfer over to electric cars. So NEO will be good for that too. So, and it would be a competitor to Tesla, since lots of people are going to have to start trading over to electric cars. So that's another thing to look out for, market trends, what's going on with the legal things.
And NEO is coming to America too.
Oh, nice.
Take over Tesla, and they're going to start selling their cars for way cheaper than the Teslas. They're going to be affordable. So again, this is a stock. I'm not telling you what to do, but I would definitely invest in NEO once it pulls back.
Okay. And a lot of people were investing in companies that make PPE because of COVID. So that's another thing to look out for. Like GM, I heard they were given approval to make ventilators, but I didn't see much a return from my investment when I bought the stock. I didn't.
No.
Yeah.
So I guess when we look at stocks, it's never really a stock that's actually just stable. They always just fluctuate like that, where it's going up and down, up and down.
They all fluctuate.
Okay.
Now, I think, there's some stocks. I do have one stock that I know it's pretty much, it's ISRG. Well, really, this used to be a stock that it had a steady trend, but since COVID, it's up and down. It's like a roller coaster. It's up, down, up, down, up, down.
Mm-hmm.
And you see how this is great for the crossover, because once it crossed over, you see what happened, and it did it again, and then it did it again, and then it did it again. So great stock, and you see what happens at earnings. This is the earnings right here, where you see the little call, the little phone, and the little light bulb.
Okay.
It tells you how the stock price moved after earnings. So when a stock reports earnings, it can go up or down, higher. Earnings is really what moves the stock market.
Okay.
Institutional investors as well, the billionaires. We're just retail traders. We just try and follow what they're doing.
Mm-hmm. That's exactly right. Yeah.
So in terms of stocks, do you think that someone can get a big or ROI if they just invest in one stock? Say
Yeah.
for NIL, if they just invest one stock, do you think they could still get a significant amount back?
Mm-hmm. You could. $64, if it, if it's projected to go up to $800, yes, you could get a lot back.
Okay.
And Tesla just went on a tear out of nowhere. NIL could do the same thing. Even if
Mm-hmm.
3 years, if you waited 3 years, you say that when it pulls back and you bought more shares as it pulled back, man, you could have a lot of money once it's
Right.
done.
Yeah, I see a lot of Teslas out there and no competition, so that's just something to think about for NIL. Yep.
Carlita, did you have questions?
So Mike, did you have it? Oh, okay. Go ahead, Carlita.
I know now if the paper trading, paper trading, you can start paper trading just by any website. It'll show you first. Is that?
Let me do this.
Okay.
I'm gonna clock out. I'm gonna go to the paper trading account. And you know what? TD Ameritrade and E-Trade has a free paper trading simulated account. It's free. You don't need money to invest. You just can sign on, go to their website, and or call, and someone will help you walk you through setting up a paper trading account.
Okay. And for those that's really good, helpful information for a lot of people that aren't familiar with trading. Like you were saying before, it's best to start with paper trading. And those are some of the websites you just said.
Yep.
Thank you for that.
I want to try and go through stockcharts.com just for a second, but because it's free. And then once you get a paper trading account set up too, you get charting as well. I'm gonna pull that up.
Okay.
And while you're pulling that up too, I know we have our when you do make profit or when you're in this, we have to be mindful of the tax
yes
reporting we have to do.
I would recommend is getting a home-based business and pretty much running all of your trading through your home-based business. That way you won't have to pay a lot of taxes. Like say, for instance, if you're just a retail trader and you have a job, even if you don't have a job and you're reporting capital gains at the end of the year, it's 34% of whatever profit you made. But if you have a home-based business, you can actually write most of that off where you only pay like 7 to 8%.
Okay.
I'm doing the home-based business thing.
Okay, yeah, that's helpful.
Yeah, and remember, we're not tax professionals or financial professionals, so trade at your own risk. But you do have to report taxes. But we don't advise you on how to do those things. But no, it's out there. So there's so many different ways to invest or diversify your income. We just have to learn it. There's so many resources out there. Mike is just a great resource that he gave us some great information. And he's pulling up the stockcharts.com right now. But there's just so many ways to just try and get different pools of income going.
Right. And remember, if you missed any of the video, you can always go back and watch this. And also Mike has a transcript that will be available.
And he's going to share more information about how you can reach him at the end. But this is just all great stuff. I just learned so much. I just love absorbing all of this up. It was just great. Great.
Okay, can you see my screen now?
Yes.
Okay. As you can see, they'll start you off paper. This is a paper trading account. So they'll start you off at like $200,000 or something like that. But I pretty much paper trade with what I would actually trade the market. Like say for instance, if I got $10,000, I will trade, whatever the percentage is of $10,000. And I've already made paper trading $4,000. So, 3,900 or whatever it is. But that shows you that this technique really works, and the crossovers and all that works. You can actually set up, like say if you go in here, you can actually set up the crossover under the moving averages. So I don't know if can you see the edit studies and strategies? I don't know if you can see it or not.
No. Edit studies and strategies, no.
Okay. You know what I could do is I can, if you want to learn how to set up the indicators, I will put together a step-by-step guide on how to set up your relative strength index, which is your supply and demand, thing, overbought, oversold. I can set up the 13 and 30 SMAs. Yeah, things of that nature. I can set all that up, and I can send it to you, and I can do that for you.
Carlita?
Because it's not showing, when I'm sharing, it's not showing that.
What was the question exactly?
Well, he's saying he can't show what he wants to show about the paper trading.
Oh, that's okay. That's okay. You gave a lot of information. If people wanted to know more information about trading without actually investing money, so that's why I was asking for it too. Just for those that want to get into trading but don't have the money now and want to learn, or have the money but need to learn. So that's real helpful.
Now's the time to just, even if you don't have the money, have a vision, have a dream, and go for it. Like, don't worry about where you're going to get the money from. Just start studying now. Just get into it, because, like, my mentor always tells me, the secrets to your life is hidden in what you do today determines your future. So if you start now and don't wait, don't procrastinate, just go do it.
Right.
And I saw an article before. I think the boy was 12 years old or something, 12 or 13. His mother was saying that he wanted some Nike tennis shoes, I believe it was. And she told him, instead of purchasing the shoes, and somebody out there might know this story too, instead of her giving him the shoes, she told him to learn about investing. So do you agree that if it's something that you like, or a company that you like to go to, it's best, instead of just continuing to go to that company and purchasing, items from that company, it's best to go ahead and try and invest in that company? You understand my question?
Absolutely. If you eat McDonald's, you better be invested in it. If you there, every week spending money on Big Macs, then I would invest in McDonald's, because McDonald's is not going anywhere. People eat McDonald's all the time. I invest in Amazon because I buy from Amazon, so that's where I am.
Yeah, that makes sense. That's a good point, Carlita and Mike DeVries. Yeah, you're right about that. So you're saying first do the research. Don't think about not having the money. Do the research, and that's the best way to actually get in. And I agree with that. When you have the mindset to want to do it and I guess the willpower, the mental fortitude, it'll come. The money will come.
Yeah, it will. Yep.
And you can start off small. You don't have to say because this, company is 3,000, I can't do it. You can always just start off small.
Start small. There's actually a stock course in a website. It's called Raging Bull. His name is Jeff Williams. I'll send a link on him too. He's really good. He trades penny stocks and he's very successful. He just turned $500 into $10,000 in 3 months. So
Wow.
he's very successful and he does the swing trading thing. So I'll send you that information as well. And that's just that, you can do it. I mean, it's good resources out there, and I have them all the years that I've been doing this. I do have resources that trade stocks, options, and whether it be big or small, like penny stocks, midterm stocks, like anything over $5 and up, and then options. So I have really dependable resources for that.
Okay, thank you for that great information. Thank you. So we did get some great companies to look into if we want to buy some shares. It's Qualita asked one of the questions whether it's good to buy partials of a share, and Mike answered no. In fact, it's not good to do that. And it's good to start small if you're just learning, and it's good to go back and read a lot of this information over if you're just starting, because it's very helpful. It's good to look at the market trends, and the best tool is to look at the trend, the charts, to compare how the desired stock has done, your potential stock has done over the past day, second, hour, 52 weeks. Look at that before diving into it. So those are good tips. Thank you, Mike. Thank you for all this information. The transcript will be available. Mike, did you have anything to share with us? How to get in contact with you, upcoming programs, something like that?
Boss Up Online 2019 at gmail.com. You can reach me at that. I will have a service probably starting up in April. It's underway right now, where you trade with me one trade per week, one stock and one option depending on your preference. And I will be having, I will send that out to you as well. But that's coming in April.
Okay, and there's a price to that. The price is $59.99 or $49. How much?
Actually, be $29.99.
Oh, wow! So that's a great introductory price to work with Mike. He just gave us. This is just an introduction. So this was great. This was very, very helpful. Thank you, Mike. Thank you so much. You all have any more questions for Mike?
You said, can you tell me one more time how they can reach you? You said it was. Oh, I see here. Boss Up Online 2019 at gmail.com.
Yeah, 2019 at gmail.com. That's correct.
Okay.
That was
So
a lot of great information.
It was. You've been doing this for 10 years, you said?
Yes.
You've been learning it. Yeah. Yeah. And it shows. It definitely shows that you know this stuff.
Yeah, because that was a lot of helpful information, the way you broke it down in layman's terms, of course, to help us understand it. And it was the basics of it.
Mm-hmm.
Yes.
Yeah.
And
so if you could give us some, I guess, key takeaways for both options and stocks and then options, what would you say those main pointers are?
Key takeaways again would be, study. Do not invest in money you don't want to lose. Just be patient and learn. Those are my key takeaways. Just be patient and do not invest in anything you can't lose, and just go for it. Just go for it. Don't wait. Get in. Start studying now.
Absolutely. Thank you.
And if you want the transcript of what we went over today, you can message Meek App on Facebook, and she will forward you how to get the transcript of what Mike went over today.
Yeah, we do want to thank Meek for bringing Mike to us. Meek and Mike. Thank you, Meek and Mike. This has been great. Mike the Priest. This is Mike the Priest. That's him. If that's how you want to find him, it's
bossuponline 2019 at gmail.com.
Yes.
Yep, and it's pinned on the comment section. Bossuponline 2019 at gmail.com. Mike knows his things around trading and options. He has just shared us some great information. It's very helpful to those who want to break into it. And there's an upcoming course he has, or a service he's providing. And if you're interested in doing that, please contact him at bossuponline@gmail.com.
Bossuponline 2019
at gmail.com.
Yes.
And again, he is having a stock option class where he's going to be helping you trade stocks. And if you want to reach out to him, then again, reach him at bossuponline 2019 at gmail.com. That's a very low price to learn more information about some stocks. It's a very low price. So
I'm trying to help as many people as possible. That's my goal at this point.
Yeah.
And that is a good low price, because there are a lot of programs that I've seen with trading, Forex and different companies. They want you to pay a entrance fee, and then you have to pay a monthly fee. So your fee that you're offering, that's really great. It's a great fee.
It's just one flat.
Absolutely.
I'll give you the stock. I will have a commentary on it, telling you why I'm getting into it. You know, the price of what the plan. You know, where am I getting in? Where am I getting out? How much am I expecting it to go up? What my stop loss is. That's a plan. And when you have a sound plan, you will win.
Okay. Okay.
yes, that's a lot of different things that he's offering for just a small fee. So again, for anyone new to stocks, this is a great opportunity for you to get your foot in the door with stocks. So he can help you and kind of show you a way around it. He's setting you up with a great stock option for you all. So this is a good opportunity for anyone just getting new into stocks, or if you already have stocks and you just want even more wealth for your family or wealth for yourself, this is a great opportunity for you to buy into.
Yes, yes. So we would love to thank you, Mike, and once again, thank you, Meek. If you have anything else, Mike, for us.
That's
Okay.
it.
One of the comments said this is the lowest that I have heard. So that's a great price that you're offering.
Yes, absolutely.
Awesome.
All right. Well, thank you, Mike.
This
Thank
was
you,
great.
Meek.
It was very helpful. Thank you so much. I learned a lot today.
I learned
Thank
so
you.
much. Yes, so much, so much.
Thank you so much.
Glad I can be.
Yes, yes. And thank you for the PowerPoint. That really hit home for us.
Yes.
You'll have it today.
Yeah, we can do it.
I'll send it out today.
Okay.
Thank you.
We'll look
Yes,
forward to it.
absolutely. Thank you. Thank you.
God bless you all.
God bless you too.
Tell them we'll give them the link and they can post it.
She said she's gonna. You said what?
I'll send it to them and then they can post it to anybody.
Yeah,
who
she'll
wants it.
send you the link and you can just post it.
Okay.
okay.
All right. Absolutely. Thank you so much, Meek.
Thank you
Thank
so
you, Meek.
much.
Thank you, Mike the Priest. This has been extremely helpful. Very
Awesome.
helpful.
And thank you
You
all.
learn something new every day. Thank you.
That's right. And thank you all BASSUP and BABUP members for following in and listening to Mike's presentation on stocks. We'll have more things like this and more information for you guys, just dropping gems on our community to strengthen you, to strengthen your families, to build financial wealth within our community, because that's what we need.
Yep.
So we appreciate all who watched and listened and tuned in, and come back more with us. Hang out with us.
Yeah, and contact Mike the Priest for his program. It's a very low offer, $29.99. I wasn't even expecting that. So thank you, Mike. Thank you for this information. And you all have a good day.
As always, shop gobassup.com if you need any of your clothing, anything like that. Valentine's Day is coming up. Go shop at gobassup.com. See what
Hair
we have
products.
there.
Hair products.
See you later, guys.
Bye.